Welcome back to Trading 360. I'm Nicole Petalides. Thanks for being with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Mike Shorr, Director of Trading Education at Prosper Trading Academy. Thank you so much for being with me, gentlemen. Our first one that we're going to take a look here. Mike, you have Zscaler on your radar. Why is this one front and center for you as your trade for today?
Yeah, hey, great to be here. I love the space, and the whole space has been kind of knocked down, but I love the sector, and so in this type of situation, what I'm looking for is not trying to pick bottoms, because we're looking for a reversal, or at least an out of this type of sideways trade that we've been seeing, and which has been slightly downer. So I'm looking for triggers to the upside. Zscaler fits that really, really well. So will the next one. But so I'm looking for a triggered upside move, not trying to play off support, but actually go with a momentum move to the upside.
And you think there will be one? Right now, we see it sort of consolidating, and right now it's around 270 or so. Ben, your thoughts on, he's just waiting for a nice momentum move to the upside, which happens in this type of group, no doubt.
Yeah, all three of the stocks, good afternoon, guys. All three of the stocks that we're looking at today are very similarly kind of in this consolidation phase now. Zscaler's actually been kind of trending to the downside more so than the others, but when we look at the daily, you'll see what I mean in terms of, and I oftentimes am reminded that sideways is a trend, so we don't always have to be looking for that staircase type pattern to play out, but we're looking at the 60-minute time frame here on Zscaler, ticker symbol ZS, and how they struggled since we double top up around mid-November, back in the beginning of December. That was around that 376, 375 level. Last quarter results failed to excite. You can see some of the price decay we saw as a result down to that $218.52 level, and kind of holding above last month's lows though so far. Let's take a look here in terms of what we've seen in the month of February. Again, holding up above the Jan lows still, down around this 220 level. So that's the key area, I think, for the bulls. They want to see it hold above that level, but the bears want this thing to roll over here right now. Again, that's why I sort of like the take here in terms of Mike's approach, looking for a breakout type move one way or the other, not necessarily looking to pick a bottom, but if you take a look at the weekly, you're going to see if higher this week, 4 in a row, something we haven't seen since October. They're still down around 10% since the beginning of the year, testing their 50-day moving average right now, right at that 278. Well, they're just below it right now, 271, but down on the day here by about 4%, 3%, and again, just testing this 50-day moving average just below it right now at 278. So I like Mike's approach. Wait for something directional and something with conviction, because there hasn't really been much as of recent here.
Yeah, and look at how it came off those highs. Yeah, Mike, tell us more.
No, that's exactly my take on this, is that that's a good way to get burned in this market by saying, okay, this is the low. I love this stock. Let's just buy it. Instead, we wait for that move to confirm that. And that move for me is all the way up today at 289 and change. So obviously that's a no trade for me. A no trade is a win in these type of situations. So, don't try and be a hero. I say that in my rooms all the time.
Yeah, so you're thinking 289 right now. It's at 270, and your trade is over what period of time here?
Well, this one is just out to the 25th. This is because we do have earnings coming up. So this is going to be a no trade, I believe, unless we get some sort of huge rally. But I'm looking at the 287 half, 295, 297 half, 1 by 3 by 2 butterfly. Looking for, if we do get that trigger, and I would probably, depending on where the thing is trading, I would probably get out before earnings. So this is a quick one. So, and that thing, if it gets to that point, should be trading about $1.25. So you have, if things go right to your short strike, where that 3 and the 1 by 3 by 2 is, then you're looking at a 5-to-1 risk reward there.
Okay. Let's move on to your next one in the tech world, and that is VMware. You have this one on your radar, Mike. Why is that?
A lot of the same reasons, same sort of thing where things are pulling back or consolidating, and again, waiting for these type of swing breakout scenarios. So the same thing with VMware. That one we have earnings again. So that may be a no trade as well. But hopping on those things, a lot of these earnings the numbers have been strong. Trying to game these earnings has been increasingly difficult. But that would be a triggered entry that I would be looking out to get out probably before earnings.
Understood, yeah. And you're making these moves before earnings because sometimes you get some crazy volatility or these big legs or gaps, particularly if it's to the downside. It's hard to, recoup those in some cases. Ben, your thoughts on the VM chart here at 126 and change today?
Well, I think if we were to get one of those moves, investors would be happy one way or the other. They're looking for some movement here, very much range bound, even more so than Zscaler. Let's take a look at the chart and dive into the 60-minute time frame first and foremost. We were just looking at the last year's worth of daily bars or the line chart in that instance. But here you can see we're stuck in the middle of the range for the most part after coming off upper levels November 145. We traded all the way down to 108. Now that 108 level is a big level, that mid-December level, and I'll show you why. We firmed off that level into the end of December, beginning of January. You can see we've come off a little bit from 138 back down to 126 here right now, but I want to show you the daily time frame, and then again just point out how we're in the middle of this range here that we've established since the beginning of November. Here's the daily, and that gives us a pretty good look at that range that we were just talking about in terms of and the comfort we found around this 124, 125 area. But here you can see how we're bigger picture just kind of in the middle of the range that was established all the way back in the beginning or May of 2019, and we bottomed out around $60 on the pandemic. You can see how we found comfort in the middle of that. Now, we've been supported around the 100 level, so that's a key area I think what the bulls would want to continue to hold. But take a look here as we get into the weekly time frame. You're going to see just a wide range area of consolidation that we just identified, but also note how VMware is no stranger to this sideways. I forget, again, I'm reminding myself that sometimes trend sideways is a trend, or sideways consolidation is a trend, and ultimately, again, I think there's some key hurdles to the upside, but what I like about these well-defined consolidation areas, Mike, and I see you're cued in on them as well, Nicole, is you get this well-defined upper and lower extreme. So it gives you a pretty well-defined area to kind of gauge that next level of directional conviction one way or the other once you do get a breakout.
Yeah, absolutely. And so as we take a look at this one, final thoughts here, Mike, on VMware.
Yeah, and so what I'm looking at here is kind of your sideways to not down. So I'm looking to sell a put spread here as opposed to a breakout move to the upside. Playing off of that support in that, I don't remember the exact area, but I believe it's about 123.70 or something like that, where 121, 123 put spread, and selling that into next week, hoping to get, you're probably not going to get your normal decay, but you're going to get some decay and a lot of support. I don't think you're going to have a big move to the downside before earnings. But again, your
I
risk
see
is
in your
capped
notes you have
that.
121, 123. In your notes you have 121, 123 put spread. Yeah, and you talked about the 200-day and 100-day moving averages too.
Yeah, and that's going to be your support. So breaching both of those is going to be really tough to do before earnings. So like I said, you're probably not going to get the full decay out of something like that if earnings weren't there, but you'll get some, and it's a pretty safe play, certainly with your risk capped.
All right. And then last but not least, we take a look at JD.com. And in this one, we think about consumer, we think about e-commerce, behaviors that we've been seeing. And this one, of course, based in China. So tell me a little bit more about JD.com. Why does this one jump out at you, Mike?
Well, so we've seen your Affirm, your Shopify just getting destroyed. I love both of those stocks, and it's been nearly impossible to buy them with any sort of success. So the same sort of thing. This isn't necessarily. I did want to highlight one to the downside because there's obvious possibilities to the downside. But what I'm doing here is I'm going to do a calendar spread in this where I'm buying the expiration that is after or directly after. So your implied volatility is going to hold up, and I'm going to sell the put that's before. So you're going to get accelerated decay most likely because you're not going to have the earnings, yet you're going to have the Vega from that back month hold up. So I'm looking at that 68. So this is the March 4th versus March 11th, 68 put calendar. So if we sit here, you're going to make money. You're probably going to make money in that you're not going to lose anything from decay because implied volatility is most likely going to continue to go up. So it's almost, I don't want to, you never say risk-free, but it's a pretty good risk-reward ratio. And if this starts to act anything else like your Shopify's and your firm or anything else, then you have a really nice shot to the downside.
Does that make sense to you, Ben? What do you think?
It sure does. I think Mike's bringing a good reminder here today that we don't always have to be looking for these well-defined trends or high conviction type moves. There is opportunity that presents itself within these sort of consolidation areas and these range-bound trades. So I actually looked at JD, and it was almost identical to what we just talked about as far as the VMware and some of the price activity we've seen there. Let's dive into the move lower here that we've seen from the $92 level all the way down to 62, and you can see how we firmed up some since. Basically, again, as we were talking about as far as VMware, back to the middle of the range for the most part. Sideways consolidation, holding up above the Jan lows, which is key not only for these two individual names, but also for the broader market, the ES, the NASDAQ, the Dow, the Russell. Investors want to see those Jan lows hold. Now, we're zooming in here as we take a look at the daily time frame. You can see, again, a similar pattern in terms of what we were talking about with VMware. I like the lower extreme, the well-defined support around the $60 level. The upper extreme, not as well-defined, but I'm noticing here a lower high for one. Ultimately, if you just take a step back, taking a look at the weekly time frame, you can see, again, similarly to VMware, no stranger to these very well-defined, kind of elongated, extremely mature areas of balance that form. And then we were just talking about, so you've got the upper extreme here around the 50 level, and you've got the lower extreme around 19 as we were chopping up throughout 2019 into 2020. Look at what happened as we broke out. Again, you get that high conviction move, an area of consolidation that forms, so that's acceptance of the most recent move, and then it was just off to the races. So I think investors want to see, again, that 60 level hold. They want to get it back up and through 85.90. We always talk about how that opens up the door for a retest of the upper extreme. This could just be a longer term, larger area of consolidation that's forming ultimately. Again, as you can see on the left half of this chart, they're no stranger to that. And I guess in some ways, guys, Mike, this would be very bullish in many ways for them to be able to hold this upper level and consolidate at this area right now.
Certainly could.
All right. Thank you both. Yeah. Thank you both very much. Mike, did you have a thought? Did we interrupt you?
No, not at all. Just thanks a lot for having me. Had a great time.
Yeah, always. The big three is always a lot of fun. I love that we get the opportunity to look at these and do some trades on some big names we know. Thank you both very much. Ben Lichtenstein, always. And Mike Shorr, Prosper Trading Academy. Thank you for the big three today as we looked at Zscaler, VMware, and JD.com. Thank you.